Guys, good to be back. Going to talk today, everything fractals. Some of you might have heard, you hear a lot of comments about fractal nature of the market and this daily fractal, 4 hour, things like that. Anyone here not really know too much about fractals? It's basically the cornerstone of how myself trade. A lot of people at bootcamp do as well. Right. So it's a little bit like this. We'll run through a little bit of what we'll do today. I think is we'll do a little bit of fractal theories and stuff like that, and then we'll maybe do some how you could apply it to today's markets, and then we might just get the Forex tester and see if sort of go back in time and run through the fractals and just see if we can learn anything from it. And then next week we might take it a level further and do some sort of trades on the Forex tester with it and see what happens there. Okay, so fractals are pretty much like this. If I just gave you a real basic example, not using trading, but if you take a square and then take multiple squares, something along those lines, they suddenly, once they're all put together, they suddenly become a larger square, don't they? And you keep doing that, and suddenly you can build yourself up something pretty big. It's called fractology, okay? And then suddenly those 4 squares, might become a larger square. And so it's almost like a whole lot of building blocks, if you like, okay? And those theories can quite easily and very importantly be applied to trading, because this is the way that charts form themselves in their different time frames, allow the nature of the laws of fractology to be applied. Okay, so a chart is always trending or always sideways, but it's never really in a straight line. It's always stepping its way around, right? It goes down, it goes up, it goes down. And so we can use these laws in sort of how you would build blocks to how you can trade in charts. Let me give you an example using charts here. If this was a daily swing to the downside in black, just going to let the chart catch up there. Okay, so that's a daily chart. If you looked at it and said, oh, the daily chart's just swung down and made a little lower low down here. On a 4-hour chart, that would, in green, would look something like this, where your 4-hour chart's going to probably be swinging down. There's something, sort of high level, but it's going to be swinging down. And then it's going to be in an uptrend. And then it goes back to a downtrend. Okay. By principle, a daily swing is a 4-hour downtrend that goes back to an uptrend and has a change of trend on the 4-hour back to the downside at a lower high with respect to previous. Sort of using price action as well, if you understand price action. Okay, so the green's your 4-hour. Inside there, we have, say, 15-minute candles. Okay, and so a 15-minute chart's going to be all these little swings down, a little uptrend, a little swinging down sort of deal. And this is going to keep going and going. It does, they all do their same thing and all look the same, but just within their own time frame. Okay, so the 15 minutes is going to swing down and this gets a little pullback going. So it's the same as the sort of building blocks, right? Where you've got the small blocks put together make a bigger block, which makes, put those bigger blocks together can make bigger blocks, right? I've got the charts the lag from me to Hotcom's quite slow today, so I'll try and bear that in mind. And so this 15 minute just keeps doing its thing, and suddenly it goes into an uptrend for a while and goes into a downtrend. You know, so this is what we refer to as the fractal nature of the market. Okay, is we have you know, in a daily swing is a 4-hour downtrend, a little uptrend back to a downtrend, and within those 4-hour swings there's a whole lot of, say, 15-minute swings and doing all their thing. And even within if we just took a magnifying glass and put it on a 15-minute swing like this, on a 2 or 3 minute chart or something, even 1 minute, it's going to be a little downtrend like this, and then back to an uptrend, and then at a lower high it does the same thing again. So the yellow could even be a 2 or 3 or 1 minute chart, and the red is the 15-minute swing. Guys, understand what I mean? If you guys can understand this, it can go a long way to making life easier in terms of trade analysis, trade planning, trade management, trade exit. Okay, if you're not understanding, guys, just anything, just let me know. Okay, this is how I do my sort of price action. Is how I do the cornerstone of my trading all the time, from my analysis right through. Okay, and if you can understand it, it can be pretty powerful. Okay, so if we take the live markets, what can you tell me about this? We'll just use the euro, since the euro looks to be in dire straits right now. We'll use the euro. What can you guys tell me about this euro daily chart here? Obviously it's down, but it's a whole lot of, it's down over here, isn't it? A whole lot of daily swings happening, so daily downtrend. Okay? And it's come from like a daily swinging down, daily uptrend, back to a daily downtrend at a lower high. So it's moving it up a fractal from what I was just giving an example. The highest level I showed you was a daily chart and then a 4-hour. This is a daily chart doing exactly like in the example I was showing you in regards to the 4-hour. If I change this to a weekly real quick, what do you know? We have ourselves a swing. Just like an everyday swing. If I didn't tell you what time frame this was, if I didn't tell you what time frame we're on, and I showed you, and I said to you, oh, look at this 15-minute chart, broken some lows, we're actually in a trap, broken that to the downside. On this pullback here, would you all be thinking short? If that was, say, a 15-minute chart, anyone be thinking, yep, I'll have a piece of that? Absolutely, wouldn't you? Yeah, it's actually, see, it looks very much like a daily chart could look, 15-minute, hourly. It just happens to be a weekly. Okay. And what I showed you there on that daily chart before, which was that downtrend and the uptrend, that's it there, a weekly swing. Okay. So when I'm doing my analysis, as a trader, and I'm back up in areas like this, I'm thinking, well, we've just broken out of a long-term trap that's lasted most of summer, broken down, daily in an uptrend. But man, if I start seeing opportunities to short up in these areas up here on shorter term time frames, I'll be looking to take that weekly fractal further to the downside, right? So I might look for shorter term time frames to change trend, like I was explaining before, in these areas, and then look to short. Okay, so something, I don't know, you might look for the 4-hour change trend, something around 142 or something, and then just look to write that down. Well, what if you missed that and now you're where we are today? Daily swinging down here. Okay. What does that look like on our 4-hour chart? Let me show you. Just let me zoom out here a second. That daily move, that's that high up there, and that's that weekly swing high on a 4-hour. Basically, we've just been swinging our way down here, and now we're back in the uptrend on the 4-hour. Remember, a daily swing is an uptrend. Okay, so if you reach resistance on a 4-hour chart long in a daily downtrend, i.e. you've got, your fib drawn and you're pulling back to resistance, you're going to be looking for areas to short, right? You're going to be thinking resistance, 4-hour uptrend. I can maybe look for areas of resistance where this will change trend. And if I miss that, maybe change trends in other time frames and look to take a trade. So going back to this, ways of doing analysis is my daily's down, my 4 hours down. So if your daily chart's down, your 4-hour chart's down, what would you be wanting to do? Long or short? Right. So based on this chart here, if we just go to our 4-hour, where would you like to short from? Remember, our 4-hour is swinging down, right? So we want to see something like this, down, 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 right? Would you agree? If I'm sitting in front of my charts right now and I want to sell this, I want to do it at an area of resistance in a downtrend. Okay? Right now, yeah, exactly, George. We need a pullback. Right now, we're probably more at a level of support where people may consider trying to long this thing a little bit. Okay? So we need something back up in here. Well, how can we get ourselves into something like that? Well, we can go and drop the fractal down to something like a 15-minute chart. And Actually, it's an hourly. I'll use a 15. And then we can look to form our 4-hour swing, take our short, right? So here is that 4-hour swing down so far. Okay, now we want a short. We're looking for something maybe back up here to do that. Okay, now to do that, we're going to need the 15-minute chart to do what? Right now, our 15-minute chart's forming some sort of base down here. That's going to have to get itself into a change of trend and go long, isn't it? We're going to have to see a 15-minute chart do something like this. Hello, I'm long. You know, just like it did over here. You know, this week so far, before it's sort of rolled over and done its thing. But yeah, we need to move back towards 134, 134.20, 134.40, and then up here, we would start looking maybe for a change of trend. Now there's a couple of, so this is, just breaking things down. This is how I do my analysis every day, guys. I look at if I was sitting down on my charts right now, this minute, for the first time today, I would, just to reiterate, I would look at my daily and go, well, bearish. And I want to sell it. But I only want to sell in areas that I understand as resistance. So I'd go to my 4-hour chart and say, where's my resistance or my red zone or my sell zone? Up here, somewhere in there. Okay, I don't want to be selling at support here. I want to see a nice pullback and short, otherwise I don't get the trade. Okay, and then I'd be getting my 15-minute chart out, and I might put a Fibonacci retracement on that drop. Okay, and then I might be looking at my pivots and everything, but I'll be looking for an area to short, to continue the short side buy if I have for this market right now. I notice that a 50% fib and around there at around 134.20 and a 200 EMA on a 15-minute chart, I have myself role reversal. I have myself a little area of potential opportunity to sell. Okay. I can then go to something like a pivot point. And lo and behold, 134.19 is also a daily central. So that's what I've been looking for. So therefore, I've now got myself a little area, haven't I? Sort of 134.20-ish. I might put an alarm in at 134.10 or something on my GFT platform here. And I've just set myself a trade plan using the fractal nature of the market. I've used the longer term time frames to create me a bias. I've identified where I want to get in. I understand that I want to see a 15-minute change of trend or a change of trend up in this area to sell. Okay, so I'd be looking like the 15-minute to do maybe something along these lines. It might trend its way up here a little bit. It might sort of double top, roll over. And I'd be looking for opportunities to sell, depending on how aggressive I wanted to be. So the 15-minute change of trend back to the downside. And once I'm up here in the area I want to sell, I can even just go to another fractal, like the 3-minute chart, and say, I'll take I'm so confident because I've got my daily down, my 4-hour down, everything down. Europe's a little unstable. Some economies are going to get an S&P downgrade or negative watch. They got this whole new treaty thing. if I get a change of trend on, say, a 3-minute chart up at 134.20ish, I'll take myself a shot. And if it doesn't work, I'll take my 10 pip loss, and then I'll wait for the 15 minutes to roll over, and then I'll try it again. But it's totally using the fractals of the market, guys. I would, 3-minute, a 3-minute change of trend, somewhere where I'm putting this black arrow, I would have that with a higher high stop. So see if we zoomed in here on this 15-minute chart over here, and we've got this going on, sort of thing, okay? I would be here or here looking for exactly the same pattern as I've drawn in green here, but on like a 2 or 3 minute chart. You guys understand? So I'd be looking for the same sort of change of trend on a shorter term time frame at these peaks as my opportunity to take the shot. And then just have a higher high stop, like 10 pips of risk or something, and then off it goes. So done analysis, done trade plan, know how I'm going to execute, got my alarm set on GFT, resistance, 4-hour chart down, waiting for it to roll over. Probably take a very short-term shot at it on a change of trend. If it fails, I'll get in later on the 15-minute chart. I'm looking for lower lows on my daily chart because my daily's swinging down here. So I'm looking for, say, 132. So I'm done. That's my trade plan. That is actually my trade plan for today. That's what I ran through in class today with my class. Probably looking for 132, give me a pullback to something like 134.20, short-term change of trend, and I'm going to short it. And that's sort of primarily using the fractal nature of the market to help do my analysis, do my trade planning, decide how I'm going to get in, where I'm going to get in, and where I'm going to get out. Because I would rather do this, George. George asked a very good question. Let's say we come up here. And I get this happen on my 3-minute chart, say. It comes up to that area, swings up, rolls over, okay, pulls back. So somewhere here, Rob takes his shot. Okay, so I make a trade where I put the arrow and I've got a higher high stop here. And this happens. Well, I lose my 10 pips or whatever, right? Now that chart might just be swinging long now because something fundamental. It might just go long for I don't know how many pips. But I would rather take a shot like there and lose 10 pips, a shot there and lose 10 pips, so a total of 20. And then you might find you take another one over here. So you take a 3-minute change of trend here, fails, goes up, works. So in the end, I've risked, say, 10 pips here, 10 here, and 10 here. So I've risked 30 pips. I've been able to have 3 shots at it. I've got myself at the top of the new fresh swing, and off I go. So it's just, sometimes on taking the 15-minute change of trend, you'll have to risk 30 pips in a single trade. Why not just take little, you're so confident in the direction because you're 4 hours trending down like you like, the daily's down. Why not just take a couple of little shots? It's got to be above the swing and all the rest of it, yeah? Okay? And it's because I've got, this is my 4 hour, this is what the daily looks like right now. It is looking like this, right? And I've got my 4 hour that's been in an uptrend, rolled over, coming down. Okay? I would never do that. I'd never long it doing that approach if everything was down. And, your daily's down, your 4 hours down, everything's making fresh lower lows. I would never long on a 3-minute change of trend in the face, of all that and get hit by like a freight train. But if I'm at 4 hour resistance where I, trust my fractals, I think it's worthy of a little, a couple of little shots. And especially in today's markets, guys. Today's markets are a little bit weird. They're not like they were a year ago. And I'm finding, I'm not the world's biggest trader off short-term time frames like a 3-minute chart or anything like that. But today, the markets are moving up and down so sort of fast intraday that sometimes you got to. And so for me, it's just a change where I think change is required. So I'm just favoring a lot more shorter term entries in the direction of, say, the 4 hour and trading that way. Does that make sense, George? Now, there's 101 ways to do it. What I've just been explaining is basically like scalping your way into a spot trade or a swing trade. Okay? Like, for example, here today, so I was explaining, we were taking a look at in my class, if you were looking to enter on a 3-minute chart today, this, by the way, let me just clean up this. Fib, 24 hours ago, this right here in yellow, screw my yellow pen, this zone right here in yellow was our short zone to short the euro 24 hours ago. We said about 134.40 to 50 was going to be our short. Okay? And we were explaining today how you might have taken a shot in here and break even. You might have taken a shot here, loss, maybe minus 10. And then you might have taken a shot up here, a high stop, survived, and could quite well still be in this trade. Especially when you get a little fundamentals out of Europe that help you on your winning ways here. It calls for, if you're taking the shorter term stuff, by the way, it does call for, good psychology, strong psychology, because, if let's say you took a trade here, fail, trade here, break even, trade here, fail, trade here. Like, it's 4 trades to get the big one. And that plays on people's minds a lot, doesn't it? God, 2 losers and a break even, nothing to show for myself except 20 pips of loss. And it's still telling me to short it. Shall I do it? I don't know. What most people do is they don't take it because they only limit themselves, and then it works, and then they kick themselves even more. It's seriously about absorbing pain. getting thrown off the horse and just getting back on it again and again and again. And that's what I do to it, guys. I basically trust my fractals to the point where if you know, you'll see this with my trading quite often. Okay, is I have direction, and I'll take a break even, a minus 12, a minus 15, another break even. And it's like, man, this day is starting to wear on me a little bit. And then you get a plus 76. So this could be like Asia, you know, New York, and then late New York, you know, things finally go their way. And suddenly your day is sort of plus 50. And it's like, oh, that's not too bad. The big thing is, can you live through the blue box? And that's trading, guys. Taking losses, taking break-evens, having shot where you believe the trade's going. And I think as long as you've got your fractals lined up and you've got, you know, you're trading with the direction and there is direction, it's not like sideways, but it's trending, you give yourself the best shot of getting that, you know, decent trade. Yeah, I'll go sit down, make a whole lot of trade plans. There's my alarm there, just in that dotted line. And then I'll just go and do something else. Then when my alarm gets triggered, it's time to go to work. And I'll go and wait for my change of trend and stuff. And then I'll take the trade. Okay? And then what I'll generally do is, let's say, if I just go to this, say, 3-minute chart. Now, let's say this thing trends its way up here and I get to my short zone. You know, it does something like this. It might give us a little move fib and then sort of trend its way up again. Okay. When it rolls over and I take my trade, let's say, you know, I take my shot in yellow up here. I'll probably put, you know, I've got my stop up here. What I would do is I'd put an alarm where my stop is. Tells me that my stop's been taken. And then I'll probably put an alarm like at the move fib swing. Okay, and then I'll do something else. But honestly, I'll walk out of my office and go and cook breakfast and get kids ready for school, and I might tweet something. I might think about, you know, boot camp videos, whatever. And then, you know, I'll be sitting there, my alarm will go. It'll be like, oh, broken this area here. Broken through here. Great. So I'm now 30 pips in profit. So stop gets moved to break even, and then I sort of go about managing it as as per my plan. Yeah, don't sound so surprised, Harry. I'm an awesome cook. Anything you like. Just because I'm a trader doesn't mean I can't cook. Jeez. Did you think trading's about fast food and because you sit in front of your charts? I spend very little chart time, guys. I make my trade plans in advance. My trade plan here, no, boy, I'll trade like 8 different pairs. Some yens and Aussie and the pound and the Kiwi, and I do, David L. You know it, buddy. It's easy when you got one of them swanky pizza ovens in the backyard. So notice something about my trade on my board of management. She cooks sometimes, but she's probably, you know, something with the kids or something. I enjoy the cooking, you know, a glass of wine. Anyway, Something about my trade plan. What can someone tell you about my trade plan? That's my trade plan on the euro. Bang, bang, bang. Sure, if you want that, George. Using alarms. See, my trade plan is set. Okay, that's my trade plan. That was my trade plan A for the day. Is up here. I'll quite often have 2 trade plans, or 3. But, my trade plan A is fib of that drop and short it. Okay? The most important thing about that trade plan, guys, is that's probably going to take hours from now to come into play. And I've trade planned. I'm relaxing. I'm not staring at my charts like a zombie. I'm not getting confused about everything that's going on. My 4-hour fractal tells me I'm shorting from there, and that's the way it is. And then, so now I'm doing other stuff. I mean, I'll go watch TV. I'll go, and I'll do this across all the pairs. I'll go across, I'll do the same sort of thing on the pound. I'll say, I'll make a trade plan like this on the pound. I'll short you here. That'll be trade plan A. Okay, so I want to see that. Now, I have a trade plan B on this today, which was actually the fib of this rise to actually take us to A. Potentially, just the way the price action was. And I'll do all this sort of stuff in advance, and I'll mark entries with alarms and stuff, and then that's it. They either go and take my alarms or they don't. And so I'll be sitting at home, and then suddenly, bling. Harry, she was to start with, and I've taken over. Ozpin, I don't get the trade. Boyke, I do consider fundamentals, and I'll change my trading strategy as per whether I think markets are really being fundamentally driven. See, here, things technically roll over like this, change trend, don't they? Hello. Oh, yes. Technically, lovely. Down we go. Fundamentals are more like this. Because it's shock news, goodbye Euro, goodbye Aussie, whatever. And so you got to, this is fundamental over here, change of trend, this is technical. You have to change the way you do everything. Yes, George, I move fib more. Well, it depends. See, if this was a 15-minute chart here on the technical side, I would rather trade the move fib of that to the downside. But that's more like a 4-hour swing, isn't it? So if this was a 15-minute chart, this will be more like a 4-hour over here. And I just prefer the move fibs or the higher fractals, but I like to trade it off the shorter term time frame. And use shorter term time frames to enter over there. Make sense? What we can do next week, guys, is we can continue this with like part 2. And we'll bring in the Forex tester. Why don't we, next week, we'll make it part 2 and we'll do live fractal analysis of them that day. Like we'll pick 4 pairs. We'll pick like a pound, an Aussie, a yen, and something like the CAD or Euro pound. And we'll fractically break down and trade plan, analyze and trade plan the day, basically just using fractals. and then we'll compare notes on how they did. How's that sound? Good? Sort of how I'm driving things in Asia right now is where just break down the fractals and then off we go. So here's the, just to wind things up maybe here. Here's USD yen. Move fib. So to answer your question, I would have rather traded that in the pink box. Okay. But now I want along this, it's sort of in this area here on the fib of this rise. On that move fib is how I'd like to do it. Most of it Boyka, yes, and a little bit self-taught, but most of it is boot camp, yes. Albert, I'm doing it in Asia. I do it with my class pretty much, what I'll do for the day. Okay? So the euro short that I was explaining to you that I took that today. Got enough here. All right. That was planned over here. And this was taken in New York and actually planned in Tokyo. But I'll do, I'll change plans during the day if I need to. But I woke up this morning to trade New York and said, I did take a loss trying to get in it initially. And then you just got to jump back on that horse and get back in it later. Okay? And that's, sometimes your trade plans, I'll say this, for the next 24 hours, I'll start in Asia and I'll plan everything I want to see happen. And I'll do plan A, plan B, plan C. We'll do it next week. Okay? And then, I sit back and wait. And then, throughout the day, I might, while I'm in front of the charts, I might change my mind about some stuff. Nice one, George. I still think this is going to happen today. I don't know. I still think that can happen. But we'll see. I think there's something to be said, guys, for trade planning, learning to be a good analyst, trade planner, and sitting back and waiting. My best trades have always been when I've sat back and said, oh, well, there's my trade. I'm going to short you from there. Come up and do it. And I've had to sit there for 4, 5, 6 hours or, I've set it in Asia, come back from New York, and it falls into play. They've always been my most successful trades. If I'm making a trade 10, 15 minutes after sitting in front of my charts, I'm chasing price. And chasing price equals losing trades. It's not until you have a big, fat look at the market and do something in advance and pick those areas that you sort of see a difference in your trading. Anyway, guys, that's us for today, for this week. I'll make a note of next week, and we'll catch you then. Have yourselves a good one. Watch this euro today, guys. This euro this week could get really interesting. There's also a lot of fundamentals out there in the market, so just take it easy, and we'll see you next week. Cheers.